Do you want to start investing but feel overwhelmed by where to begin? Maybe you've heard invest early, diversify, think long term, but no one actually explains what this means in practice. So, in this video, I'll share 7 practical tips that can help you avoid the most common mistakes I see new investors make. Tip one, before you invest anything, you need to understand where your money is going. So, for example, the financial markets include things like the stock market, bond market, foreign exchange market known as FX, or money and capital markets. So, each of these markets behaves differently. For example, one major advantage of the stock market is liquidity, which simply means you can buy and sell stocks easily during trade hours. But every market also comes with risks and advantages. So understanding those differences helps you make smarter decisions. Tip 2, not all investments are the same. So the most common types are equities, known as stocks, bonds, known as fixed income, commodities like gold and silver, real estate. So, for example, equities mean you own a part of a company, like a cake, you own a slice of that cake. Bonds, basically you lend money to someone, it could be a corporate, like a company, or a government, and you receive in return interest payments. Some people also keep money in savings accounts, and this is quite popular from the people I know. But those usually generate very little returns over time, especially with inflation. So understanding what each investment does is very important. Tip 3, diversify your risk. There is no such thing as a risk-free investment. Even keeping money under your mattress carries risk. And by the way, I actually know real people who do that. Inflation reduces purchasing power over time. So diversification helps reduce risk. So that means spreading your money across different assets like equities, bonds, commodities, different sectors. So the tech sector, industrial sector, um, energy sector, and different countries. So having exposure to India, for example, and having exposure to Peru, different countries. So if one investment struggles, the others may balance it out. That's how portfolios survive volatility. Tip 4, and especially true for those in their 20s like myself, time is one of the biggest advantages you have as a young investor. So if you're in your 20s, you have something incredibly valuable, time, and that beats anything. Markets fluctuate in the short term, but historically, long-term investors benefit from growth, compounding, and market recovery cycles. According to UBS, about 80% of investment success comes from strategy, not short-term decisions. That means patience wins. Now, on to tip 5. Avoid common beginner mistakes. Here are some of the biggest ones I've seen. Investing without a strategy, buying based on hype, trading too frequently, meaning buying and selling too much, putting everything into one investment. Tip 6, pay attention to global events, especially these days where news impacts every business, every individual on the planet. Markets don't move randomly. They react to economic data, central bank decisions, political events, corporate performance. So, some important indicators to watch include GDP growth, unemployment rates, consumer confidence, company financials, amongst many others. Understanding the context helps prevent panic decisions. Tip 7, and this is my favorite one, find a mentor. It's so underrated. This applies to all areas of life, by the way, not just investing. A mentor doesn't have to be a professional investor or a financial advisor in the case of investing. It could be a parent, it could be a professor, it could be an industry professional. Mentors help slow down impulsive decisions, share lessons from their experience, and provide perspective. And that guidance can save you years of. In conclusion, investing isn't just about getting rich quickly. No, it's about building knowledge, discipline, and patience. At first, it can feel overwhelming, trust me. But over time, the process becomes clearer and easier. And with the right mindset, investing can become both profitable and enjoyable. If you're smart, ambitious, and still unsure what to prioritize, this is for you. I'm opening a waitlist for Behind the Scenes Blueprint Lab, where I share the exact systems I used to juggle internships, studies, building, investing, fitness, and social life in my 20s. Tools that start from where you are, not where you should be. Join using the link in the description.